Why has the rise of finance been so bad for business?
Well, if you think about what the financial markets are really supposed to do, they're supposed to take everyone's savings, your savings, my savings, and funnel it through financial institutions into new businesses, right? That's how capitalism works. That's how we grow. That's how jobs get created. But if you look at what's happened since the 70s onward, that paradigm has changed. So today, only 15% of money coming out of financial institutions is getting invested in businesses. The rest of it is buying and selling of old assets, trading. It's a closed loop that really enriches people that are in the markets but doesn't do a lot for Main Street.
And companies are incentivized to live by the quarter, to embark in all this kind of financial engineering, whether it's stock buybacks or other things, simply to boost the share price with pressure from investors. That's a big part of it.
It's very much, and it's really Kafkaesque. I mean, the lead of my book, which I will hold up here, is the story about Apple, which has been so much in the news in recent years and is in the news again. Warren Buffett recently bought in. But over the last couple of years, Apple's share price was kind of lagging, and that's in part because they really hadn't had a huge new breakthrough since Steve Jobs' death. But what they did have is a lot of cash. They have $200 billion of cash, a lot of it in offshore bank accounts. But rather than spending that cash here at home or in other markets, they were actually borrowing, issuing debt to pay back shareholders like Carl Icahn and bolster the stock price, artificially, because when you do buybacks, the share price always goes up. So this is this sort of financial engineering that I think leads to vulnerability. And you saw it recently where the first sign of a revenue fall and bad news in the China market, Icahn dumped the stock. When you focus on financial engineering instead of the real kind, I think you have a more vulnerable company and a more vulnerable economy.
So do you think if Apple had instead spent that money on its own core business, we might not have seen the iPhone sales drop like we did?
I think that you might see something new. You might have had a whole new technology. I don't think that Steve Jobs was the kind of person that would have paid as much attention to the minutia of balance sheet manipulation as Tim Cook has.
And this also is in a way, has helped fuel this populism that we're seeing with the rise of both Bernie Sanders and Donald Trump.
Right, because what financialization has done, and when I say that, I mean the rise of finance, the scope of it, the scale of it, the power of it. The financial sector is about 7% of the economy, but it creates 4% of jobs and takes a quarter of all corporate profits. So think about that. I mean, that's not trickle down, that's trickle up, right? It's finance itself is sucking the oxygen out of the room. It's not creating jobs. Wages have stagnated. Entrepreneurial rates have fallen as the financial sector has gotten bigger. And that's why you see 40 years on in this process, candidates like Trump and Sanders speaking to a group of working class and increasingly middle class Americans that really feel like the system isn't working for them.
Before I let you go, I have to ask you, what do the banking CEOs have to say about this? I mean, what does Jamie Dimon say about this premise?
Well, I haven't gotten a call from Jamie Dimon, but I will tell you something that's fascinating to me. I thought that a lot of Fortune 500 CEOs would be calling me and saying, yeah, this is a great book. We're up against all this short-term pressure. Right. I'm actually getting calls from financiers themselves, very high-level hedge funders, people that are sophisticated in the market saying, you're right, this is a growth problem. This could actually affect my portfolio. What can we do about this? Tell me more. So in a way, maybe some of the solutions could come from finance as well.
It's the reverse of what you'd expect.
Exactly.
What are the Fortune 500 CEOs saying? Are they denying it?
Honestly, these guys have a shelf life of 3 years. I think they're just trying to keep their jobs, and that's part of the problem.
Quarter to quarter.